Okay, today let me explain how the professional trader navigate or analyze the chart. So if you look at here, this is the chart of gold where I'm going to analyze this to the professional way. So looking at on a daily time frame at first, if you look at here, the daily time frame, nothing going to be happen at this point as the candles were printing side by side and the current candle would not able to break the high of the previous candle. Respecting the high of the previous candle, it is trying to pushing down, means we may see some sorts of a drop down on gold from the daily perspective. Looking at on a daily perspective, the price is falling, means we should have to wait it for the some sorts of a resistance in the lower time frame so that we can go for a sell. Looking at on a 4-hour time frame, this gives us a clear picture. The current 4-hour candle with respecting the high of the previous candle trying to break the low of the previous candle, and there is a clean traffic to the left, means there is a higher probability that we may see some sorts of a drop down till here. All right, from the 32.11 to 31.38, it's a way big range. If I measure this range, it's all about like a $71 move. All right, 706 pips move. So looking at on a 1-hour time frame, we should have to adjust our chart as well. So what you can see is you may see some sorts of a support at this point. Likewise, we may see a support at this point, and this 1-hour candle trying to break and close below this support. Anything breaking below like a 32.11, we may expect a huge drop down to the downside. So looking at on a 30-minute time frame, which is our executions candle as well most of the time, so it has created a support at this point. Let me measure it, which is around like a 32.10. Yeah, 32.10. So it is trying to pushing down at this point, and if it's dropped down, we may expect to fill this week. And if I measure this range, which is all about like how many pips, like 110 pips, so anything below 32.09, we may expect to the price drop down till 31.98 from the 30-minute time frame. So for that, we want to see the candles break and close below the support like this, so that we can execute the next trade to the drop down. All right, so we need to wait for a candle to break and close below this support. That is a favorable case. Anything in between these range would not be a best trade setups. It's basically called a no trade zones. So if you look at here, in between 32.20 and 32.10, this range is a no tradable zone. So likewise, anything break and close above this range like 32.22, we may expect to be a weak fill like 76 pips. It's a way big range. So these are the two possible favorable cases for us. Other than that, we should have to wait for a candle to break and close below this support for the sale. For buy, we should have to wait for a candle to break and close above this resistance so that we can go for the weak fill. So this is the simplest way to analyze the market. So in between this range, this is a no tradable zone. All right, so anything below this support means a good signs for the sales. And also, if you look at here, you may see that you may raise the questions like there is a rejections to the left. So what does these liquidity rejections mean? Actually, if the candle break and close below the support like this, means these weeks becomes weak fill. So you don't need to be worried. You can expect like the next candle to be dropped down like this. All right, so this is the simplest way to analyze the market, any pair of currency. This is the gold chart. You can do like this. So most of the professional trader, most of the profitable trader in the world used to follow these same practices to analyze the market. If you learn it, you'll make money. there is no doubt, I will guarantee you, there is a more than 80% probability that you can make money if you analyze like this. So if you do like my videos, please do like, comment and subscribe, and you will get the more videos if you hit the bell icon button as well. So this much for today. Thank you.